Welcome everybody to this video. My name is Ali. Today we're going to discuss chapter 6 and in chapter 6 we are going to discuss the 4-year cycle theory in Bitcoin and what we can see of this theory back into the price cycle of Bitcoin. Let's continue. So the assignment review, I'm going to do it in the live session, so I'm going to do it right now. So we're going to skip this for one. So the table of contents, I've decided to divide this presentation into 4 chapters. The first chapter, we're going to look at the Bitcoin bullish cycle. Bullish cycle means that the market is going up. We're going to look at the technical analysis on the cycle. What is the behavior of the investors at the beginning of this 4-year cycle theory and at the end? So, and everything in between, we're going to research that and look at the price data of the past cycles, and we're going to make some conclusions out of it, what we can expect in the future, and what type of strategies we can implement in order to be profitable over the next years. In the part 4, we're going to discuss the Fibonacci retracement tool. We're not going to discuss it completely, like full detail. I'm just going to give you guys a little bit of information about it because this is going to be discussed in chapter 8, if I'm not wrong, and then we're going to discuss the full details of it. Let's just continue. All right, the Bitcoin 4-year cycle theory is in its name. So every 4 year, we can see that the supply of, not the supply, but the earnings of Bitcoin is getting halved. So in the beginning, in 2009, when Bitcoin was released, every miner, when they mined a Bitcoin, a block on the blockchain technology, they would be rewarded 50 Bitcoins. So after 4 years, we can see that the reward is being reduced to 25 Bitcoins. So, and then after 4 years, it's going to be reduced to 12 and a half, and in 2020, it's 6.25. So in the next 4 years, which is 2024, we can expect a Bitcoin reward per block of 3.12 and a half Bitcoin. This indicates that the supply of Bitcoin is becoming less and less. It's become scarce. And if the demand is going to increase, it will increase in its price. That's why Bitcoin is very valuable among a lot of investors, not only because of the halving, but also the utility behind it. We can send, for example, here in the Netherlands, if I want to do a business with somebody in, let's say, for example, Australia, I could just send him a few Bitcoins um, over the Bitcoin network, and it will be delivered to him within a few minutes, and it's completely secured and completely transparent. If we would do this with the normal banking industry, the banking network that we currently live in, we had to pay with a lot of fees because all those banks would work with a lot of intermediaries, and they're going to take their cut out of it. So it's more efficient, it's faster, it's secure, it's transparent, it's able to open to the public, and everybody can join the network and leave the network whenever they want. If you compare this with a bank, let's say for example you live in a certain country, your country is blacklisted. You cannot join, you cannot participate in their network because they're going to exclude you out of it. And Bitcoin is not like that because Bitcoin doesn't exclude anyone. If you're a human being, you have a cell phone, you have a computer, you can just take um, participate in it. That's the beauty of this network. All right, let's have a look. So after each halvening, the halvening happens after 210,000 blocks is mined. And this is approximately, if you look at a time frame, this is calculated in 4 years. And this will create an immense supply shock on the total supply of Bitcoin because all those Bitcoins that are still left to be mined will be worth more because a lot of people want it and the demand is increasing. Nowadays, it's the 4th of March 2022. We can see that a lot of countries, for example, Russia, we have Turkey, we have also countries in the third world countries, their currency has totally collapsed. It crashed. So what they're going to do is they're going to look for an alternative to invest their money to increase the value of it. And Bitcoin over the past years, we can see that a lot of countries started to accept Bitcoin as a legal tender, as a legal form of payment, and a lot of government and companies are accepting Bitcoin and put it on their balance sheets, which is a good development. And keep in mind, this is only happening in 2009. That was the moment when Bitcoin was born, and it's already 2022, meaning it's 13 years. Look at the amount of uh, development Bitcoin made in 13 years. slowly gonna be mass adopted by the whole world, and I can definitely see that happening in the future. But let's continue. So we can see that the miners are the first connections, the first people that will receive the Bitcoin because they're keeping the network alive. And they will also need to sell their Bitcoins in order to be profitable because they will make fixed costs such as rent, electricity, they have employees, they need to eat, and so on. So these are fixed costs and they need to cover it with the profits of the Bitcoin. So that's why you see sometimes in the price, you can see a price pump and then they're taking the profits, which means that the price is slowly reducing over the coming months, meaning they're taking their profits, they want to increase, and eventually people from nature, they cannot hold onto something forever. Eventually their psychology, this is how the psychology works, they just want to take the profits and enjoy and do something with it. So that's why people also love physical goods, physical properties instead of digital ones only. And we got to keep in mind if the miners are going to sell their bitcoins, it has an immense impact on the the price of Bitcoin that is currently trading on the markets because most of them they will just hoard the Bitcoin. Meaning hoarding means they're holding it, and selling means yeah they're selling it. They're just giving it to other people who wants to scoop it up. All right, so this is basically the basic demand and supply. The supply of Bitcoin is 21 million. Over 6 million bitcoins are already lost. Why? Because people didn't believe in Bitcoin back in the days, or some people lost their passwords of their hard wallet and their Bitcoin is now lost forever. What what will it cost if a Bitcoin is lost? It is a basically an indirect donation to all the remaining supply that is still circulating. Why? Because the value of one Bitcoin is then slowly increasing in its price because all those other Bitcoins are now lost, meaning the total supply that is available to trade from traders amongst each other will get reduced even more. So we have 21 million Bitcoins and more over than 6 million is lost. If you subtract it from each other, it's only like 15 million Bitcoins are left. So this is also an indication why Bitcoin is so scarce. And we have over 50 million millionaires over the world. And if all of them decided to take just one Bitcoin, it will not be sufficient enough for all of them. So that's why if you take Bitcoin, if you have at least one Bitcoin, hold it for the long term, people, because eventually it will be definitely worth over a million. That's what I personally see from the fundamentals of Bitcoin, what it has to offer, and where the society on a global level is going. People are going to live more digital, they're going to live in the metaverse, they're going to live in Web3, meaning they also need digital currency. All right, so let's continue. We're going to analyze the price cycle of Bitcoin. You can see that in 2009, it was traded below $0. You could just get Bitcoins by filling in a form, or Bitcoins was a price reward for a StarCraft tournament, for example, back I think it was in 2012 or something. The person that ended fourth or fifth place, they would get 250 bitcoins as a reward. I don't know, it was something around that. Until this very day, if they hold it, they're no millionaires. So that's really excited to see. So you can see the price back in 2010 and even 9. You can see it was trading below $1 and then it went up to $16. Then it went crashing down. And then the next halving, the red lines, that indicates the halving of it. I'm going to increase the image for you guys. Excuse me. So you guys can see it better like this. All right. So let me just increase. This is okay. So the first halving, we can see that after each halving, the price in the first 1.5 or 2 years, it will increase. This is what they call the bull market. This is the bull market, and this is the perfect moment to buy Bitcoin. And then after 1.5 year or 2 years, you can see that people are taking the profits and they're selling it. This is the moment when it's a good time to buy in. When there's a lot of fear in the market, when people are selling it, that's the moment when we buy in. We need to have the reverse mentality, and we need to think long term. Think in the bigger picture. If you doubt, if you zoom in too much, let's say if you zoom in into this area, you will have a lot of doubts, a lot of fear. But if you zoom out, if you see the total picture, you can see that every time when the price of Bitcoin declines, it tanks. When the bear market hits, it's a good time to dollar cost average, and meaning you're going to buy Bitcoin for a specific amount of money each week or each month, and and then eventually it will turn slowly into profits, because people have the wrong mentality. They think we make money in the bull market. No, we make money in the bear market. Why? Because in the bear market, that's the moment we take our position, our assets in our portfolio, and in the bull market, that's the moment we sell slowly by slowly. Dollar cost average in the bear market and dollar cost average out in the bull market. That's the strategy that we need to do. So we can see the first halving, then we have the second halving, and also went up, and then we have the third halving, which is in 2020, 11th of May, and then now we have the next phase. So we are now in 2022, so we can still expect a bull market. I think if you look at these data, you can see that in 2000 and around 2013, we can see that the bull market lasts 1.5 year, and then if the next halving, the bull market lasts longer, almost 2 year, and then the third halving, that's the theory that's now going on. The bull market, the cycle, it lengthens, meaning the bull market extends. It's not 1.5 year, not 2 year, but it's now going to 3 years and more. So because why is this happening? Because a lot of people are starting to accept Bitcoin as a legal tender. It's getting slowly mass adopted, meaning eventually it will flatten. Instead of the parabolic curve that's going like this is how Bitcoin goes. It goes the opposite. So when something is mass adopted, it will go in a vertical line, just like the gold price. All right, let's just go back. Control Z, like this. We already discussed this, so we're now going to the next slide. Let me increase it for you guys, and then we're gonna see. All right, technical analysis on the cycle. We're gonna do this on TradingView so we can see it ourselves, because data never lies. Numbers don't lie, people do. So all we gotta do is just look at the data and see the behaviors of the people, of the investors. We can see it's getting reflected back into the price of Bitcoin. So we're going to look at the all-time high, the all-time low, the price in the previous cycles. We're going to look at the factors of the micro and macro. Micro means the changes in the crypto space itself, and macro means the changes that has an effect on Bitcoin that is happening outside the network. Let's say, for example, wars that we have now currently with Russia and Ukraine. We have politics that's moving on. We have um, I don't know, let's say poverty or crisis going on. We don't control that. It's just all outside of the market. So, but those things, those circumstances also have an impact on the price. So we're going to zoom in on cycle one and cycle two in on TradingView. So this is also what I wrote. A good trader looks at the price history, because the price history shows the behaviors of the traders, and then he will eventually adjust the strategy the right way to be in massive profits. All right, let's do this. We're still in this slide. I'm gonna open TradingView, and then we're going to BLX. BLX chart is the chart of Bitcoin that has, like, if you go back all the way back, is going back to 2010. So we have a lot of data to discover, a lot of data to talk about, and I really love to talk about this with all of you guys and to show you what Bitcoin has to offer. We're going back to my notes. Um, let's go to the halvening. Where was it again? Bitcoin halvening. Okay. So I already did some stuff for you guys behind the scenes, so we're just gonna have a look at it. So the first halvening was back in 2012. Okay. So before that, we're just gonna zoom in. Boom, like this. We're gonna remove this a little bit. Okay, there we go. So basically, this is what it is. We have the first uh, bull market. The first bull market, you can see that Bitcoin was trading around $0 back in 2010, and they went all the way up, and it went all the way up to how many? $31 per Bitcoin, and it made a percentage increase of 31,000. And this is like all data. You can check it out for yourself. And then after that, we can see it was approximately over here. This cycle, this price pump bull market cycle, it lasted for 248 days, meaning it's less than a year. So in less than a year, you could have made, if you invested, um, if you invested in Bitcoin back in the days, you would have made over, yeah, well, sometimes it differs because I need to be very, very specific with this. Let's do 0 to 0.6. And you have, like, let's say approximately between 30,000 and 50,000 percentage growth. You would have made so much money. So if you put $100 in it, just do the calculation, just do the math yourself. You would have made insane returns. But after that, what happens is people are going to take the profits, meaning it's going to decrease. Boom. with a 93% correction, meaning there's a new bottom forming in Bitcoin. Back in the days, it was trading for $0, and now it's trading for $1. And then we can see the bull market lasts for how many days? It lasts for 541 days. So in this period over here, this is a good time to buy a lot of Bitcoins, to buy a lot, to dollar cost average in. You're gonna buy Bitcoin. Nobody knows the bottom. Nobody knows the top. So what you're gonna do is you are going to, let's say for example, you have a lot of Bitcoin over here. All right, let's make this white. You're gonna you have a lot of bit, let's say 1,000 bitcoins. When the market is going up, you're gonna sell over here. You're gonna take your profits, not all of them, but just let's say 20%. You're gonna sell over here as well. You're gonna sell over here as well, and then 20 is 40%, 60% that you sold. You're gonna sell here 80%. 80% of your portfolio is gonna be sold. You're gonna hold the 20% for the long run, for the next upcoming 20 years, 10 to 20 years. And now when the market is going down, this is the moment when you buy Bitcoin. Okay, you never know the top, you never know the bottom. So what you're gonna do is when the market is crashing, you're gonna buy here at this level again. I'm gonna make it red for you guys. Buy. When the market is going down even more, you're gonna buy more. When the market is going down more, you're gonna buy more. So this is dollar cost averaging when the price is going down. And then eventually, when the new cycle comes in, when the new halving comes, this is what happens. Boom. The market is increasing with a lot of percentage. And we can see that in this bull market. It rose up approximately 10,000%, but we can see two tops. We can see one top in April of 2013, and we can see another top forming in December 2013. So people took the meaning. This indicates that people were buying Bitcoin in this period, a lot of Bitcoins, and then they were selling it in this period. They were selling it when the market was going down. So it is a good way to buy the Bitcoin again, and then eventually people will slowly start to move in. Why do they move in? Because they see the previous all-time high, which is this level. All right, gonna draw a line. This previous level is a resistance level. If that was the previous all-time high, meaning it was trading for $270 per Bitcoin, and the moment that broke, and the moment the price broke the level, people were going massively into the price, keep buying, buying, and buying, and buying in Bitcoin, just kept buying, and then you see the price went up for another 328%. And then we also have the bear market. The bear market comes from here to this. It lasts for 360 no 949 days. So we can see that the bull cycle, it lengthens, and the bear cycle also lengthens, meaning you have more time to make money, you have more time to buy Bitcoin. So now we have the second halving in 2016, and we can see the same thing happening again. The bull market, it lasts for 526 days. It rose for 3,000%, and if we look at it now, it decreased with another 80%. So we can see that a crash after the bull market, the blow off top, an 80% correction is healthy in a market. And this bear cycle lasted for 869 days approximately. So it's a good time to buy Bitcoin again. And now we have another happening back in 2020, which is 2 years ago. We can see that we have made a new all-time high, meaning we have one new top. And the moment the price breaks this level, this is the moment when I expect consolidation, and then we're gonna have the last blow off top of approximately, and I still stand by this target, 280k, and then from 280k, oh excuse me, um, let me just draw it correctly for you guys. This is how the market goes up. It goes up, and then people take the profits, goes up, it could take the profits, and it's slowly going to 280k, somewhere around this. And then we have to calculate the 80% correction, which is going to bring the price back all the way back to 60k. So I think 60k, excuse me, is the new bottom for the Bitcoin in the next upcoming years. So we have another bull cycle for, let's say, 800 days. Um, yeah, 800 days, something around that. We don't have the data right now, but then we can see like the new halving is coming in 2024, and then it will have another impact on the price. So that's what we see in the Bitcoin cycle. The cycle shows us that this asset, even if you bought the top, over here, let's say 20K. You just hold it for 4 years. 2021, hold it for 4 years and you're still in profit. So even if you bought the Bitcoin at 60K, just hold it at least for 4 years. And the data and history shows that every time you buy the top in the previous cycle, just hold it for 4 years and you will be in profit. So all we gotta do is invest the money that you don't need the following 4 to 10 years, and then you will be in massive profit. That's what this data shows. And numbers don't lie, but people do. So all we gotta do is follow the numbers, research the data, study the data, and then we can see what the human being will do. And that's why what I love about Bitcoin, the whole network is automatically being monetized by a mathematical formula, and we don't need any human beings doing the bookkeeping of it. All the transaction is being developed by smart contracts, by not smart contracts, excuse me, by mathematical formulas, and will automatically um, do the financial administration for us. We don't need human beings. And every transaction from beginning till the end, every transaction is public, is on the blockchain, and everybody can look into the data and all the specifics. So there's no privacy whatsoever when it comes to all the transaction, but you can keep your wallet private, so people don't know who you are. So this is what I love about um, Bitcoin, the network Bitcoin. Go to a bank and ask them, show me all the financial transactions that have been performed by the bank itself and all the people from the beginning till the end. They will call the security and they'll show you the door. It's that simple. That's how they work, because they don't want to show their numbers to you, but Bitcoin does. Bitcoin has nothing to hide. It's transparent. Cryptocurrency is transparent and reachable for everybody. So that's why what I love about this network. It's also the money that the return that it makes, but the reason why it increases so much in value, it's because it's solving a lot of problems in the world. And if you solve a lot of problem, money will eventually come to it. So that's why I still believe till this very day that Bitcoin under a million is still heavily undervalued. I believe in that. That's why I'm not selling any crypto assets for the long run. I have a portfolio that's for in the long run. I'm not going to sell it. Why? Because I can see the fundamentals. It's way better than the current financial system that we live in. The financial system that I personally was born in back in 1993. So I studied our traditional financial system with the upcoming new decentralized one, and I can see the decentralized one is more fair, more transparent, and better and efficient than the system that we live in. And that's why I 100% believe in it. It's not just blindly, it's because I studied it. And all we got to do is read. Read, people, read. That's all you got to do. It's no rocket science. All right, let's go. Technical analysis on the cycle. Okay, I made a summary of this for you guys. So we can see the time frame of cycle one after the first halving, of course, back in 2012. We can see the 28th of November 2012. We can see that the price increased with almost 12,000%. So, and the end of this bull market was here in 2016, the 9th of July 2016. So we can see at the price, the lowest point was $12, and the all-time high, the highest point, was trading around 11,000. Uh, um, 97, sorry. 79, sorry, excuse me, I'm getting confused because of the languages. But anyways, it has a price increase of 12,000%. So if you put, let's say, for example, 10,000 in it, or even 100, or even $1, you will turn $1 into $12,000. That's how beautiful it is. Everybody can make money in cryptocurrency. All you got to do is study the price history, the fundamentals, and everybody can make money. The only thing that distinguish a good trader from a bad trader is that good trader, they understand the asset that they're going to buy. That's why education is very important, people. Knowledge distinguish the real people from the FOMO people. You need to enter the market before the cycle hype is getting in, and the only way to do that is by studying the fundamentals, the cycles, and the price history of the asset. You need to understand the asset before you buy something. You're not going to go to a shop and buy a random phone. You're going to be like, hey, I love this phone. It looks good. I'm going to buy it. No, you're going to look at the specific. Okay, this is a nice phone. Okay, it's a Samsung. I love it. What does it do? What features does it have? Is it optimized? Is it fast? What do I have to do with this asset? Is it beneficial for me? Yes or no? Only if you understand this asset, then you're going to buy it. Otherwise, don't buy it. I have a personal ruling. If I don't understand the asset, if I can't explain the asset in a child's language to somebody else, then I'm not going to buy it. It's that simple. The only thing I buy is something that I understand as something that I see a lot of potential, having a lot of potential in the future. Otherwise, I won't make money. And it's stupid if you buy something, let's say for example, $100, and you're gonna sell it for $50. You just lost money. You're only gonna sell it when you make profit. It's that simple. So let's say for example, if you put 100 dollars in it and it will increase 12,000%, you will make a lot of money. So technical analysis on the cycle. Cycle two. The start of the cycle, it was at 9th of July 2016, and it ended the 11th of May 2020. That was the next halving. We see that the lowest point was $480 and the all-time high was $20,000. It has an increase of 3,700%. So that is insane. What conclusion can you draw from cycle one now that you look at cycle two? Now pause the video and do the research for yourself. Okay, we're just going to continue. So if you look at the the difference between cycle one and two. In cycle one, you will make a bigger return than in cycle two. In cycle one, the price increased 12,000%, and in cycle two, it only made a price increase of 3,700%. Meaning, it's harder to make the people who were the early investors always makes the most money. Why? Because they took the biggest risk. The biggest risk doesn't rely on the price. The biggest risk lies in when it's very cheap. Why? Because nobody back in the days knew that the price is going to increase to 20,000. Nobody knew that. So there's a lot of fear, a lot of uncertainty. Only the nerds, what people call, of course, I respect all the people. I'm a nerd myself, by the way. Only the nerds, they study the mathematical, they study fundamentals. Those people, they will get the most um, profit out of it because they study it. And the majority of the world, just look around you. People are just throwing to social media, liking this, sending memes, sending here over there. They're not efficient with their time. They're not studying. They're not focusing on self growth and their knowledge. They're just, yeah, doing the daily job, 9 to 5, going home, pretending to be rich. Yo, I got this new watch. Yo, I got this new phone. I got this new car. But if you look at um, their true value of their portfolio on their bank accounts is very low. That's what they say. They say this generation, they're happy people with happy pictures, but they're very sad inside. So if you really want to live a happy life, you don't need approval of the outside of other people. Like, this is the way I started to develop my own mindset. I don't need the approval of you guys. I don't need the approval of the world. I don't care what you guys think of me. I got two middle fingers for a reason. I'm not going to point it, but God, I'm a believer, I'm a Muslim. God gave me two middle fingers for a reason. Why? Because I don't give 2 fucks about what you guys think of me. If you guys are believing me or not, I'm just gonna do whatever I think is the best for me and myself. And if I'm happy with it, I'm gonna do it. If I just don't hurt anyone in any way. So that's what I'm gonna do. I don't need approval of like having a big car, big house. I don't care about that. I'm just moving my own life. That's what we gotta do. The moment you don't give a damn of what people think about you. Sorry for my language, by the way. But the moment you don't give a damn what people think about you, that's the moment you become mentally free. You free yourself from the social standards. You free yourself from acknowledging by the society. You don't need to acknowledge. You don't need to get acknowledged by them. You just need to have self-love, self-acceptance, and that's when you're gonna move on and make a lot of steps in life. So, you came here on Earth all solo. You came here naked, and the only thing you're gonna do in life is win. You came here naked. You came here with nothing. You came here with two parents and a family, but at the end they will die anyway. So eventually you'll live your life alone. So you gotta focus on yourself and help the people out. That's the reason why I make this course, by the way. Otherwise, I wouldn't do it. All right. So you can see the difference between cycle one and two. You could have make a bigger return, but there is a lot of risk involved because if you look at this cycle now, The third cycle, you can see that a lot of companies, a lot of governments are accepting Bitcoin, which is another clear indication that more people are adopting it, meaning it's going to increase in price value. There's more demand and a limited supply. So back in those previous cycles, the supply was still 21 million. The next cycle, it was still 21 million. The next cycle, it was still 21 million. But we can see the demand is increasing and the supply is decreasing, meaning the price will increase. All right, so if you look at the cycle correction back in 2017, we can see that the lowest correction was 27%, and we can see that the highest correction was 39%. So a price correction, so the price of Bitcoin doesn't only go up, it goes up in waves, meaning it's going up, and then people are taking the profits. It's going up, people are going to take the profits. It's going up, people are going to take the profits. And the moment when the market is going down, don't be afraid. Don't sell your asset. Keep buying more. Why? Because the historical data show a correction of average of 29% up to 40% is healthy in a Bitcoin market, because people are taking the profits and they're buying more Bitcoins when the market is going down. And the road up to 20K, we can see that it had a lot of correction along the way. So it's not going to be an easy ride. All these moments when the price corrected with so many percentage, the market was in a lot of fear. I can tell you that. So the emotional cycle is also very important to understand. And in order to um, master your emotion, you need to understand what you're buying. You need to think long term. If you doubt, zoom out and then you understand the cycle. All right? So what you can do, you can take advantage of this. You're going to swing trade. The price is going up. Let's say, for example, 100% or 300%, sell a portion of your portfolio. The price is going down, buy back the asset with your profits. And then this is the way you swing trade. You swing trade. It's like serving. When the wave is coming, you serve it, and you serve it all the way down as well. It's like serving. That's what we got to do. It is never possible to predict the exact tops and exact bottoms. That's why you need to dollar cost average in and dollar cost average out. Okay? Don't sell your whole portfolio of it. Sell 5%, then another 5%, then another 5%, and up to 80%, because the 20% is for the next 20 years. Okay? Think like this. So you have a portion of your portfolio. One is long term, 20 years. The other one is like swing trading, and the other one is like making smaller trades. A good trader has a cash out plan for every cycle. We have seen that the cycle isn't identical. Some is longer, some is shorter, some is more volatile than the other. So because the macro aspects of the world, all the changes around the world have also an impact on the market. That's why it changes. And the more things change, the more they stay the same. So change is not bad. Change is good. We're growing. All right. Technical analysis on the cycle of the altcoin market cap. Altcoin means every altcoin except Bitcoin. Okay. We can see that the cycle back in 2016, it had a market cap of 175 million, and the highest point it turned into 474 billion. Okay. So that's where we can see a lot of money can be made in altcoin as well. So as a good investor, you should not only invest in Bitcoin, but also invest in other coins. Some coins, like for example Ethereum, Chainlink, Polkadot, Cardano, these coins, they are really strong in fundamentals and they have other purposes than Bitcoin itself, meaning they can make a bigger return in if you invest in them. So if you invest in Bitcoin, you will only make a specific amount of money, but you invested, if you diversified your portfolio into Bitcoin, Ethereum, Chainlink, Cardano, Polkadot, let's say you divided 20, you have $100, you're going to put $20 in each of these coins because Bitcoin included, these altcoins are 5 coins, you will make a big return. Why? Because you're spreading your risk, and spreading your risk, having a diversified portfolio is more success in your profits. All right, so never neglect all the altcoins because these projects are very good. A good trader knows where the opportunities are. And how do you know these opportunities? Study the white paper, study the project. Who are the people behind the project? What do they want to do with the coin? What kind of problems what kind of solution do they offer for the current problems that we live in? This is how you understand the potential of a project. All right. Let's talk about some hidden bullish divergences. A hidden bullish divergences is more for a TA nerd, somebody like me. In the chart, it shows a lower low. We can see that the price is forming a lower low, but in the RSI is showing a higher low, meaning the price is going to make a reversal. And most of the time, these patterns play out in a double bottom pattern. Okay, so um, yeah, so we can see the previous all-time high was 20K in this image. The support was lying around 17,200, and we had three bullish confirmation. We have the double bottom, we had the hidden bullish divergence, and we had the neckline being broken. The neckline of the double bottom is broken. So I'm gonna wait. Give me a second. Neckline. It was still in Dutch. My apologies. I'm gonna save it. All right. We have some few slides still going on, and then we're done with this chapter. A good trader waits patiently for the right moments. Okay, so as a trader, the most important characteristic that you need to focus on is patience. Have patience, no rush. Okay, a tree doesn't grow in a day, it doesn't grow in a month. It takes years to benefit from its fruit. The Fibonacci sequence is basically very simple. I'm gonna explain it very simple for you guys how this works. Um, you draw a line. Oh, wait a second. I still need to uh, market structure, uh, new price levels. No, determine new, yeah, determine new price levels. Excuse me. Some parts of the presentation wasn't completely translated. Every level has a resistance. My apologies for that. So you guys can follow this lesson. Uh, retest on new levels and to be continued in chapter 8. Yes, chapter 8. Okay. And down. A good trader think like a good trader thinks like a trader. All right. It's a good thing I can understand both language very well, so I can translate it everything right away. I don't need any translator program. So, anyways, my apologies for that. Determine new price level. So let's say, for example, 20K was the all-time high of Bitcoin, and we cannot determine new price levels, new resistance lines. So what we can do is um, we can implement the Fibonacci sequence with the Fibonacci tool. The Fibonacci tool shows the upcoming potential of new price levels, new price resistance line and support lines to see where we can take up profits in the long run. So all we got to do is draw a line from the swing high to the swing low, and then we will see new levels. One of the important levels, the golden pocket level, is the 0.618 level. If that is being broken, then it shows a lot of intense bullish level. Remember, every level has a resistance. So this one, 1.618 has a resistance level, 2.618 has a resistance level. And if you look at the price, we can see that the price went all the way up to 42,500, and it went all the way back to a perfect retest of the 1.618 level, meaning the 30,000 level. That was a perfect retest before the price went up. So as a trader, we could use this um, tool, the Fibonacci tool, and take this at our advantage and buy a lot of bitcoins back here at this level, 30,000. This was the previous all-time high, and we can see that the price went all the way up to $69,000 of Bitcoin. That is the all-time high of nowadays. And we still have a long way to row, a long way to go. So the assignment discussion, I'm gonna do this in the live session only, so you gotta do your homework by yourself. I hope you guys enjoyed this chapter. It was very fun for me to talk about this chapter and explain you guys how the Bitcoin bullish cycle works. And I hope you guys learned a lot from it. And as always, I want to thank you for your time and attention. And as always, happy learning and happy investing. Thank you.